Hi there, welcome to Kneppy Invest and welcome to February 12, 2025. About 40 minutes left of trading today. Just having a look at how the indices have performed. Pretty nice rally in the XJO because early in the day it was fairly flat. So up almost 0.5%. Bad day for small caps. Resources is down a little bit, but a pretty good day for tech. Now, of course, we're in the middle of February. Today has just been about looking at financial year numbers. Quite a few companies released their results today. In fact, we'll have a look at the earnings calendar because at this time yesterday, Computershare had not released their results. And TradingView said they were going to release their results. And of course, about 5 p.m., Computershare released their results. Is it 5 p.m.? About 5 p.m. Yeah, about 5 p.m. They were pretty good, particularly the upgrade and the share price up 15.8%. However, Computershare is not the stock of the day because another company called Bravura Solutions, which I'm trading, by the way, is up 19.9%. So roughly 20% on the back of their results and an upgrade as well. So Bravura Solutions is the stock of the day. If Bravura Solutions and Computershare did not release results, CBA, Commerzbank, would have been stock of the day just because it's the biggest company on the ASX. Now, I'll talk about Computershare and CBA later in the video. Briefly touch upon Bravura Solutions. Other companies that released results today include Suncorp, Evolution Mining, AGL, a couple of REITs. Ryder Capital released results yesterday. I think I've done a video on Ryder Capital, but it's some sort of fund manager or listed, what do you call it, LIC, I don't know. And a company called Amotiv, AOV, Amotiv. They used to be called something else. Share price down 7.25%. Used to be called something else, starting with G, I think. GUD, I think. Then they changed the name to Amotiv. Don't know why, but they can do whatever they want. They're the owner of their business. Well, no, actually, technically, they're not. The shareholders are the owners of the business. And I suppose the shareholders have the ultimate say, and they probably have to vote. But I'll talk about Amotiv because share price is down a fair bit. Other than that, other than financial year numbers, half-year results. The only company of note that I thought might have released something interesting was Vitura, and share price is up a little bit. There was some sort of strategic investor putting a fair bit of money into Vitura, so I might briefly touch upon that company. And I just had a very quick look at some announcements that have been released since about 10 a.m. And there was an interesting one here from Artria, securing a multi-year contract with Sonic Healthcare, but the share price has done nothing. And I was looking for any sort of financial results, and a company called Sandon Capital did release some. Anyway, so we'll have a look at some of these financial results, maybe not all of them, just a few of them, and then we'll have a look at some of your comments, I suppose. Yeah, why not? Okay, first thing I want to do is just have a go back to the earnings calendar. This is yesterday's. Do I have to increase the font, maybe? There we go. It got it all right. So CSL, Computershare, interesting enough, Computershare was a surprise to the downside. I wasn't exactly sure about their results, how they met expectations. But the company issued an upgrade, and that's all that matters to me. And the other few companies here, Genica also released results, and it's really interesting that they do have a Genica there. So maybe they put a Genica in after the fact. I don't know. Today, quite a few companies have released their results, and a lot of green, a lot of surprises here, except for Amotiv, and the share price is down. So I did not see NRW Holdings release their results, so maybe after market has closed. De Grey Mining, I don't remember them releasing results. Let's have a look. De Grey, they did. I completely missed that one. There you go. Sometimes I will miss a report, and I missed De Grey. Sorry, De Grey. And thank you, TradingView, for sending me straight. And Imdex released results. I didn't mention that company, did I? They definitely released results. So I'm going to have a quick look to see how the share price has done for that company. And Bravura and a few REITs as well. Satire was on the list yesterday, on the list today, not released results just yet. And a few other companies here, I'm just seeing if they do release results, including Alliance Aviation, Cintara, MedAdvisor, and Aero Group, Curvebeam, and Mayfield Childcare. Tomorrow, which is something I forgot to do yesterday, we are looking at Pro Medicus releasing results. IAG, Northern Star, Origin Energy, South 32, ASX, Treasury Wine, Downer, Aurora, EVT, Domain Holdings, so quite a few big companies, Temple Webster, Navigator Global Investments, Viva Leisure, Mad Paws, Bristol Holdings, and Academy. So this is why this period or this time of year is my favorite time of year. Just behind August. I do prefer August. Okay, so let's have a look at the ASX today. And a pretty good day. And I think the XJO has rallied. It has. XJO and XAO have rallied during the day. I'm pretty sure early in the day the market was fairly flat. So not sure what has caused that rally. We can have a look at trading economics because this one will put in some or any sort of economic news out there that can move the market during the day. China stocks rise on AI boost? Maybe. Well, I don't know what that AI boost is, but they're talking about. Dollar stores ahead of key inflation data. Oil snaps 3-day advance. Australia fourth quarter home loans quickens. There you go. And Mexico industrial output falls. Brazil inflation rate holds. And okay. So for some reason, our market has rallied during the day. It could be simply that American futures are up. It could be simple as that. I don't want to zoom in on TradingView. Sorry, TradingView. Okay, let's go back to the ASX today. Sectors. Oh, there's two that stand. Oh, actually three that stand out here. Industrials, financials up a fair bit. IT down a fair bit, which is interesting because the IT sector's down, but here the all tech is up a fair bit. So something's going on there. So let's have a look at IT sector to see what has been driving down this particular sector. And maybe it's one big company down a fair bit. Oh, it's down across the board. So in fact, the 8 biggest companies in this sector are all down, including WiseTech, Xero, Technology One, NextDC, Life360, Kogan, and Macquarie Technology and SiteMinder. Interesting enough, I was trying to remember what happened with NASDAQ. Down slightly, 0.29%. Dow Jones was up slightly. Yeah, that's probably why I don't remember, because nothing much happened on Wall Street overnight. So weakness in IT, but why is all tech up a fair bit? Can we click on All Tech and see what companies are in the All Technology Index? Do we have a list of companies? No, we don't. Do we have a list of companies in ComSec? Sometimes ComSec will show you the list of companies. In this, they don't. Constituents, no. All Technology Index, I'm just going to have to Google this. Sometimes you just have to Google constituents. Let's have a look if it's in the ASX. Nothing there. Maybe here. No, that's not it. Oh, wait there. There's it. Oh, this, not this side. The one below this, List Corp has a list. Apparently, this has a full list. And there we go. And that's fairly similar than the other one. So why is All Tech up a fair bit? Oh, that's information technology companies. Okay, so that's not All Tech. Okay, I have no idea where to find this information from, but according to Market Index, All Tech is up a fair bit, but IT sector's down a fair bit. Industrials had a good day. Financials having a good day. In fact, industrials are probably having a pretty good week. Yeah, up 3.45%. Financials having a good day. CBA up. Shouldn't be up by more than 2%. If it's up by more than that, you'd be worrying. Still don't understand why anyone would be buying this company now. Significantly overvalued, and the results don't really justify buying any more shares or buying some not initial shares in this company. So PE ratio is 27, and they had 2% profit growth, which is lower than inflation. So no, they're growing less than inflation, which is weird. Why anyone would be buying CBA right now? Sure, they are probably one of the highest quality banks in the world, but that just tells you banks are not that high quality in the world. Okay, let's go back to ASX 20, up 0.79%. So big companies in the ASX have had a really good day. And in fact, at one point today, the ASX 20 was down. So the first 30 minutes of trading, ASX 20 was down, and we've seen a really good rally. What a brilliant day. And let's have a look. We have 9 companies down, 11 up. So you would think maybe a bit flat. So I'd say the biggest companies in the ASX have risen, and maybe some of them have risen a fair bit. So let's just have a look. see if that's true. Yeah, so the big companies have risen. The smaller companies in the ASX 20 have fallen. Banks have had a good day, led by CBA. Again, don't know why. And there you go. And Pro Medicus, the smallest company in the ASX, is down by the most. Okay, so let's turn our attention to the top gainers today. This is always interesting when I don't have a look before I start recording. I might get a little bit of surprise here. For instance, a company called Caprice Resources, a company I've never heard of before, is up 126.9%. Pretty big turnover too, and it's a fairly small company. This company must have released something. CP, did I get that right? CPR? CRS. I'm just thinking of reviving someone on my mind. 130%. What has happened with this company today? Exceptional high grades up to 34.9 grams per ton at Island Gold. They also had a price query. Did this company rally? Yeah. Okay, I can understand why this has happened. So share price yesterday or a few days ago rallied hard, up 23.81%. Loose lips. I can almost guarantee you someone saw these results and went, oh, I know the information and I don't care about insider trading. I'm going to buy some shares a few days ago and this should be fully investigated, but it won't be because we know this sort of thing doesn't happen. Unless it's like you and me, then it will happen. Anyway, so it looks like 34.9 grams per ton sounds really impressive. That is impressive. But how deep is, not how deep, how far down, but how wide, long is that 34.9? If it's like 1 centimeter long, then that's ridiculous. But if it's 20 meters, wow, that would be impressive. And I can definitely understand why the share price is rallying. So I completely missed this. Released at 9:50. That's probably why. It was released just before 10 a.m. And typically I go away from my computer about 10 a.m. Anyway, so we have 28 meters is 6.4 grams. That's actually not that bad. 27 meters at 3. Looking for these 60 or 34.9 meters. Interestingly enough, they haven't got it on this first page. Anyway, let's move on. It does look pretty good. Pretty good. Fairly small company. Even after this share price rise, Caprice Resources is still only has a market cap of $26 million. So let's have a look at the chart for Caprice. CRS. Now, this could be the start of a massive bull run for this company, or the share price will just pull back significantly. I do like the very fact that the share price opened fairly high. We don't see a really long green candlestick, and that is telling me that this was based off the results, based off the drilling results. A lot of times when you see a company like this or results like this become a plaything for day traders, you'll see the share price open fairly low, maybe up only 1%, and then just buying through the day. The very fact that this opened up fairly high and near the high of the day is actually a good sign. Not near the high of the day, but there was buying on open. That's probably the best way to say it. There was buying on, and pretty intense buying on open. So I think the drilling results are pretty good. Now, other than that, share price has been going down. So this could be it for Caprice. Maybe this is a turnaround for this company. I might put this on my watch list just to see what happens over the next few days. Now, further down, shall I talk Bioxyne? Share price up 27.5%. No news flow from this company. Market cap 104.5 million. I don't think we did see anything. I'm just going to have a quick look just to make sure no, they haven't. Buyers and sellers, a lot of buyers. I'm wondering if there was some sort of initiation with a broker or something. That would explain it. Bioxyne, I'm just going to do a quick Google check. Yeah, this was all released a week or so ago. Fun enough, Yahoo Finance says, shadows have faith in loss-making Bioxyne. Well, it's not loss-making anymore, I think. I think it might be profitable this half year. Anyway, I'm just looking to see if there's any sort of broker recommendation. A lot of times you'll see that. You'll see a broker, like a small-cap broker or small-cap investing, what do you call them? What do you call them? Like a Motley Fool. They have advice services or whatever, buying service. I don't know what they call them. But anyway, that's probably what happened. I didn't get any emails today. So I do get quite a few emails from those institutions or whatever you want to call them. And I didn't see any for Bioxyne. But just based off the, what do you call this? The depth, just based off the buy depth, that looks like there was a recommendation. Someone recommended the company today, and that probably explains why the share price is up 27.5%. Am I thinking of selling this one? No, not at this stage. I did have a look at the market cap, $100 million. The reason I'm not thinking about selling this is because even though the share price is up a fair bit, we did see the share price pull back a few days ago. So if we saw this sort of day, just before that massive drop, the share price down 17% in one day. If we saw that instead of that big red candlestick, I probably would have taken profits because the share price had accelerated a little bit too quickly for my liking. But the very fact we had a pullback and now we've seen this really good day, that means I think there's a little bit more strength in Bioxyne at this point and less likely to see a major drop in the share price over the next few days. Doesn't mean it won't happen, but I do like that sort of strength. And the chart looks okay at this point in time. And also the volume. We're seeing really good volume coming in the last few weeks. So that's Bioxyne. At this point, I'm up fourfold with this position. So definitely could take a bit of profits with this one. And that's over a 6-month period. So I'm very happy with that. A fourfold increase over a 6-month period for this sort of company. So I could take profits over the next few days. We'll just wait and see. And what else do we have here? Small companies, Bravura solution stock of the day. Have recorded that video, share price up roughly 20%. And the main reason share price is up because they did issue an upgrade. Talk about that slightly in a second. Not slightly, a little bit in a second. Computershare, also an upgrade. I'll talk about that company in a little bit more depth than Bravura. Share price up 15%. Another upgrade. Again, upgrades the most powerful type of announcement a company can release. Let's have a look at top gainers by market cap. We have Computershare. Generation Development Group did an acquisition and a capital raising, I believe. I could be mistaken. Acquisition, and here it is. Acquisition of Aventia Group Holdings and equity raising. I would say the equity raising, equity raising. Just want to see if they wouldn't have a price in this one. I just want to see what the price they've done to that. It'll be in a second, this other announcement. And they've set the price of this capital raising at, if I could find it, at where is it? $4.15. And share price now $5. Pretty good capital raising. Anyway, so the other thing, whenever you see this sort of announcement, always wait for successful completion of an institutional offer. That is when the shares of a company undergoing this process will start trading again, when the institutional offer is completed. And they did that this morning. Let's have a look at the chart for Generation Group Development or something. What's it called? Generation Development Group. And no, talking about charts. Talking about brilliant looking charts. This is a beautiful chart. And this is one I missed. Yeah, so there's a lot of opportunities on the market. You're not going to find all of them, but this is one where it would have done fairly well over the past year over the last 2 years almost, 18 months we'll say. Share price really broke out back in August 2023 at a price of $1.40, so you've done pretty well. So this is definitely a three-bagger over that period of time. Imdex, the one announcement or the one list of, or the one financial results that I missed, didn't write down. Imdex did release their results. Share price up 6.6%. Vulcan Steel released their results yesterday. Nice little rebound. And Synlait Milk, Demerix, two companies I'm trading, doing pretty well. And of course, Bioxyne. And Argenica, the company that did release their results last night, share price up a little bit. Have a little bit of revenue, but loss-making, so we can move on. Now, let's have a look at the top losers for today. And not much here. Small company after small company. You could say Rimfire Pacific Mining, 64.8 million, has a large market cap compared to most of these companies. All these companies have a market cap below $10 million. And that is a problem with small companies. They can be quite volatile, particularly if they're liquidly traded. And there's nothing in this top loser list at all to talk about. So let's have a look at top losers by market cap. Anything here? Amotiv. Talk about that company in a second. Release their results. Gold's had a negative day. So it looks like gold's down. I didn't even mention that when we had a look at the ASX today. But all the other companies here, gold, W1 Resources, Turaco, Mika, St. Barbara, Sonoya Mining, W1A Gold, and Tipper Minerals, gold. FBR, definitely not gold. They're bricklaying. And Andean Silver, so obviously silver's had a bad day. SPC Global just up and down like a yo-yo. Nothing much to talk about here. I suppose Hillgrove Resources is down, so copper might have had a bad day. Yeah, nothing much to talk about there. Mostly gold. Okay, so let's turn our attention to companies who have released results today. Actually, I'll start with Vitura because I did touch upon this company. They received a fair bit of money from a guy called Charlie Shaheen, $5.1 million, and they used that fund to acquire Andor Medical. I had a quick look at Charlie Shaheen. He's the son of a Lebanese immigrant, and they developed a company called, what was it called? Peregrine Corporation, many, many years ago, 1984. So not the book, but in the year. So we're talking about 40 years ago. 40 years ago, and this company is pretty big. They employ 7,000 staff and a turnover of $2.7 billion a year. And it looks like they probably own petrol stations, convenience stores. They sold that to Viva Energy for $1.15 billion. So anyway, this Khalil Shaheen or Charlie Shaheen wants to put $5 million into Vitura for an acquisition. So maybe that's the smart money. Maybe he's a smart money, and Vitura could be interesting level right now or buying right now. Share price going sideways. It's consolidating, basing, going sideways. Not any breakout or sign of breakout just yet. I do know there was one comment I did receive a while ago about this company. So yeah, so Vitura. Not on my watch list yet, but every week I will have a look at the chart, and I just want to see any signs of a breakout, and I'll always have a look at any sort of announcement the company releases. If they release really good financial results or any sort of upgrade, I think the share price could rally from there. Okay, so let's turn attention to some results. We'll start off with those who released the results last night. Now, Ryder Capital released. I won't have a quick look at this one. Share price up a little bit. We could have a look at the media release, I suppose. I'm pretty sure this is an LIC or something like that. Maybe I'm wrong. Maybe it's a little bit different than that. Outlook, the immediate outlook for equity markets has been increasingly uncertain as interest rate expectations fluctuate. So much truth in that. And with historically high market valuations and an uncertain outlook, we are actively realizing profits while building a more defensive portfolio by raising cash and ensuring the portfolio is composed of a core group of value stocks that generate cash. Okay, so the main problem with that one is this irrational market, which is what they're trying to get at with that little bit of outlook. This irrational market could last the next few years. And if that happens, this company's missed out. Anyway, or this, whatever you call it, has missed out. So let's have a look at the chart for Ryder Capital. At this one point in time, the chart for this one looks really good. Does it anymore? Ryder Capital. Yep, still looks pretty good. Broke out back in early 2024 at about $1. So it's up about 34% since that breakout. A lot of volatility back in August. So obviously they released results and market didn't know what to do with it. Share price went from $1.40 all the way down to $1.10 in a few days. So in fact, on the 19th of August, share price dropped 7.5%. Anyway, so that's Ryder Capital. Now on to Computershare. I was when I went through the numbers, the underlying numbers, which one shall we do? Market announcement, yeah. I went through the underlying numbers. And for instance, revenue down 6.9% to 1.49 billion. EBITDA down 3.8%. Profit before tax up 9.6%. Management NPAT up 15.9% to 383.6 million, which was ahead of consensus. And the interim dividend up 12.5%. To 45 cents per share. But probably the most important thing here, just like Bravura, is found in this 25 or financial year 25 guidance upgrade. We have a confident outlook for financial year 25. Now, I do like management team is being a little bit more conservative. But I suppose if you're really confident, then be less conservative, or maybe, I don't know. Anyway, so they're very confident for financial year 25. I could see this going pear-shaped if some black swan events happen to Computershare. Anyway, and they might have to do a downgrade. Anyway, Computershare is high quality, capital light business, has momentum and scope for enduring growth with reduced complexity and multiple earnings drivers. Management earnings per share in 2025 is now expected to be around 135 cents per share, an increase of around 15% on last year. That was an increase from 7.5% increase. So they've gone from 7.5% increase in earnings per share up to, well, that's management EPS, by the way, up to 15% in financial year 25. So management EPS. So maybe it's management EPS we should be focusing on. And if so, even these results beat expectations because up about, what was it? 5.5% ahead of consensus. I had a quick look at the presentation. This company might have signs of a high quality, which I've never thought of before. And the reason I say that, in their presentation, they had some nice little stuff. For instance, this is the one I was looking at. So if you have a look at group revenue over the last 25 years, this is exactly what I'm looking for. Revenue up from the left, from bottom left up to the top right. Exactly what I'm looking for in a company. So maybe I should pay a little bit more attention to Computershare. But I think the reasons I don't is because as an investor, quite a few of the companies I own have Computershare as their client, I suppose. And I do have to go to the website on occasion. And I just find it really clunky. I just don't like their website. So I've always had this little bias against this company because of their website, which maybe is the wrong thing to do. And otherwise, EBIT margins have been rising over the last 25 years. A nice little rise. Return on equity at 37.8%. That's pretty good. Average historical return on equity is 23%. That's pretty good. That's actually a sign of a high quality company. And dividends been growing steadily over the past 25 years. This company has all the signs of a high quality company. I've never had a look at it. Never thought of this company as that. So let's have a look at the chart for Computershare. Now, I would imagine the chart is a chart of a high quality company. Have a look at the weekly chart. This is a chart of a high quality company. There are definite periods of time when the share price does fall a fair bit. In fact, if you go back to the tech bubble burst, share price of Computershare fell from about, $10 all the way down, the lows about $1. So we do see periods of time when this company share price does drop a fair bit. So what I might do is just put in the 200-week moving average. And it does fall below that quite often. And right now it's well above it. It's well above it. Probably the most, by standard deviations, probably the most it's been above the 200-week moving average. So that alone, more than likely, I won't buy any Computershares, even though if you have a look at the daily chart, the chart looks spectacular. Probably the time to have bought this one was back in November. They must have had or released some pretty good, or had a really good AGM, maybe released some pretty good outlook statement, because the share price broke out at that point and just has kept on rising. Not a true breakout because the share price wasn't at a 3-month high, but the share price really took off. Actually, the next day, 7th of November, it was a breakout that day. Yeah, it was a breakout. I missed it completely. Probably because I have a bias against this company. There's the breakout. Yeah, and look at the rise of the share price after that. What a beautiful chart. Spectacular. So congratulations to those who are trading Computershare or who own this company's shares for the long term, because maybe this is a high quality company. Okay, so that's Computershare and Ryder. I'll quickly touch upon Bravura as the stock of the day. Just like Computershare, Bravura, share price up a fair bit. Ooh, it's getting close now. A little bit closer. A little bit of selling coming in for Bravura, but that's okay. Now, the reason why the share price of both these companies is up is because of an upgrade. And Bravura's upgrade, where it is, here it is. Upgraded guidance, talking about revenue, EBITDA, cash EBITDA. This is a second upgrade they have released in 6 months. Actually, 2 months, isn't it? 2 months. Because the previous upgrade, I'm pretty sure, was in December. So I lied in a standalone video. I said the second upgrade in 6 months. This is a second upgrade in 2 months. I would not be surprised if they release another upgrade in the next few months, because maybe upgrades come in threes. I don't know. But this is a good sign. The company is performing better than expected. We had that sort of feeling. I'm pretty sure in commentary, in the past 6 months that, yeah, things are going better than management anticipated. So that's always a good sign. Company's now profitable, giving back a lot of their money back to the shareholders as dividends, a capital return, special dividend. And one of the reasons they did that is because they sold something, which confused me for a second. They sold something and they're giving some cash back to the shareholders. So Bravura stock of the day. Now, by the end of the day, maybe Computershare should have been stock of the day. If Computershare share price is higher, still a little bit, yeah, it's 18% higher compared to 15% higher. Okay, so that's Bravura. Now to CBA. CBA, yes, always interested in looking at CBA's results. Would I be buying CBA at these levels? No. Hell no. Heck no. I didn't read this one. ASB 2025 half-year financial results media release. Which one should I look at first? Their announcements today are really long. So their half-year results profit announcement, I'm pretty sure that's the Appendix 4D, 172 pages. Their presentation is 128 pages. So there's a lot to digest here. One of the things I like to read when it comes to CBA is not company specific. It's usually economic or macroeconomics. And I'm pretty sure they have that at the start of their presentation. Here we go. This is what I was looking for. Some relief for stretched households. So they have disposable income. How disposable or real household disposable income has looked over the last few years, and it's starting to rise again. It's looking good. They also have a bit of a forecast. They've also got spending here for looking at different age groups. That's really important. And things are looking much better than they have recently. Yeah, so we can see in the dashed boxes, that's April to June 2024. October, December 2024 is in the solid boxes. And if you have a look at the discretionary for the ages groups between 20 and 34, that was negative. Now it's positive. So things are turning a little bit more positive for those younger demographics. It's been positive the last few years for the older generations because they don't have mortgages, that sort of thing. And in the second bit here, the last column here is savings. This was also important because in the past few years, those younger demographics, they've been dipping into their savings. Savings have been going down, while the older generations, their savings have been increasing, which sort of makes sense. We have mortgages for those younger generations and savings for those older generations, and they're getting better interest. Anyway, so what we've seen there is it's gone from negative for anyone between the ages of 20 and 54, not me, and now it's positive. Now it's positive, except for those between the age of 25 to 34, still negative there, 0.9%. But just based off these two things, discretionary spending and saving, things are getting better in the economy. That's the reason why I like to look at CBA numbers, CBA presentation, because they've had this over the last few years or something. Anyway, one thing I just want to mention here, I was just a little bit ticked off. And the reason I was a little bit ticked off by CBA's announcement is if you have a look at last year's half-year report, there is a slight difference. And this is what pees me off sometimes. When a company releases their results, I want a company to have the same, use the same, don't change how they report. And CBA made a slight change. And that sort of thing does piss me off. I could forgive CBA for this time, but if you just have a look at their media release, yep, this is the one. Yep. So last year, half year 24 results. So what I'm focusing on is net profit after tax. So last year was actually quite negative, down for both statutory and cash. But if you have a look at this year's report, they've done something slightly different. They've compared their results in this half year to not only the previous corresponding period, which is what they did last year and what that company should do, but they're also compared it to the previous half year, not the previous corresponding period. So they're comparing to the first half 24 and the second half 24, which is not what they did last year. And I think the reason they did that is because the increase in profit and some of these other metrics is quite impressive based off the second half of 2024. Not quite as impressive compared to the first half of 2024. In fact, profit only up 2%. We're looking at cash profit, not statutory profit. Statutory profit is not the real profit. Cash profit is the real profit or the underlying profit because they had some one-offs over the last few years, which forced the NPAT down, and those one-offs are not there this year. So you have to look at cash profit or underlying profit. So only up 2% in financial year, or the first half of financial year 24. Yeah, financial year 25, sorry, we're in 25. And the numbers were a little bit better than expected. I did write them down somewhere. Yeah, slightly better than expected somewhere. I don't have them down here. I thought I did, but the numbers were slightly better than expected, and that's why the share price is up. Now, the share price wasn't up all day. Share price actually initially was down. So let's have a look at the chart for CBA. And funny enough, the chart still looks pretty good. So if I didn't have any bias against CBA's valuation, this chart looks spectacular. But the more the share price goes up, the more overvalued this becomes because there's no increase in profit. Very small increase in profit. So with the share price going up 2.1% and profit up 2%, this company is actually even more expensive right now. What's the PE ratio, like 28? PE ratio, there's no PE ratio there in TradingView. That's fairly high. And to be honest with you, if you have a PE ratio of 28, you want better than a 2% rise in profit. And that's my say on CBA. Probably being a little bit picky with that little bit of a difference in how they reported profit from last year to this year. But those sort of differences do matter in the end because companies can do that. I've seen companies do that before to try to market their results or sell results in a better light. So that's CBA. Suncorp, I'm going to be completely honest with Suncorp. I had a quick look at their results and I was like, okay, I have no idea how to read these. So where is it? The media release. And the reason I was like, I'm not sure about this is because, it's actually, that's not the one I was looking at. I must have looked at their Appendix 4D here, this one. Yeah, this is the one I opened up first because it was the first announcement released. So revenue up 11.23% and then net profit up between about 84 and 89%. So I thought that's a fair bit, but we expected Suncorp to have done well, just like the other insurance companies. And the main thing when it came to Suncorp was how the market reacted. I don't know if they did release any sort of upgrade in their. I can tell you right now, I didn't go that in depth. I would say probably not any sort of upgrades. They did release a financial year 25 outlook, and yeah, so probably no upgrades there. If there was an upgrade, share price would be significantly higher. Would have gone up significantly more than, what was it, 1.52%. So let's have a look at a chart for Suncorp. They sold their bank, didn't they? They sold their bank to ANZ, I'm pretty sure. Interesting enough, a bit of selling today. So the one-day candlestick is not that bullish, but the chart is a really good chart. Beautiful chart for Suncorp Group. Anyway. Next on the list, we have Amotiv. AOV. I'm pretty sure this used to be called GUD. GUD Holdings. Oh, we have to go AOV. And usually in Market Index, if a company has changed the name, they will mention, yep, formerly GUD. Not sure why they changed the name. They can do it if they want to, but whatever. Share price down a fair bit, 6.92%. We're in a closing auction right now. I did write some notes for this one. Yep, did write some notes for this one. So what we have here, we have revenue up 2%. Not for me. It was a miss, slight miss, 0.9% miss. Adjusted EBITDA up 2.8%. Yeah, whatever. 1.2% beat. Adjusted net profit after tax and amortization down 1.9%, and that was a miss, 3.9% miss. And the interim dividend unchanged, which expectations were they were going to increase the dividend. So a little bit of a miss, and to be honest with you, that sort of growth is not that impressive. So let's have a look at the chart for Amotiv, and I'll be honest with you, this chart is pretty boring as well. Well, maybe not boring, but just not impressive. Just there's nothing happening with this chart. A little bit of buying coming in today. Share price was down way more than it was. So I'd say that buying, there was a lot of selling on open. The market didn't like it. Retail investors. And yeah, a lot of selling on open. Well, the selling really continued for about an hour after opening. So that's prolonged selling for Amotiv. So definitely not a good results. And this could be the start of a long-term downtrend for this company. However, a little bit of buying coming in in the day, but share price, yeah, 9.90, fairly low compared to what it has been recently. Well, I suppose it has been about 9.80 a few times, and that's probably a support level right there. A support zone right in there. That sort of makes sense right there. The share price has been bouncing off 9.80 quite a while and sort of done that today at 9.90. But would I trade this? No. Would I own this long term? No. So we can move on and look at Evolution Mining. I'm just going to see how the chart or the share price has done today. Gold's down, so has Evolution Mining bucked the trend? It has. Evolution Mining has bucked the trend. These results were quite impressive. I don't think I did any for this one. Yeah, I don't remember doing anything for this one. I just remember having looked at their results, and it was pretty impressive growth. But I wasn't sure if this beat expectations or not. So profit up 277%, statutory profit, so reported profit, underlying profit up 144%, underlying EBITDA up 77%, earnings per share of 18.4 cents, up 251%, and cash flow of 273 million, up 420%. So the numbers look really good. Just below the key highlights, they do have financial year 25 guidance, and they remain on track to deliver their production guidance. So no upgrade at all for Evolution Mining. So let's have a look at the chart for this company. The chart probably or should look really impressive. And it does. Beautiful looking chart for Evolution Mining. Another company released results was AGL. AGL. I'll be honest with you, these results did not give me any sort of feeling. I did have a look at some articles talking about these results, and for instance, in Market Index, it mentions the shares gained 2.6%, so that was written early in the day after a relatively positive first half result and a narrowed full-year guidance. That is the one thing I remember. There was no upgrade or downgrade in guidance. They just narrowed the guidance. So for me, that's neutral. So revenue up 15.3%, underlying EBITDA down 1%, underlying profit down 7%, but it did beat consensus. In fact, it says 24.8% beat in consensus, this article. It does concern me that revenue is up a fair bit, but underlying EBITDA and profit down. So that suggests a bit of a squeeze in margins. And that could be wholesale prices. I actually don't know. Didn't read I didn't go into too much depth. So I did go through these results, and I was like, nah. So it looks like the market may have thought it positive at the start, but by the end of the day, a little bit less positive. So let's have a look at the chart for AGL. And it's a sort of one-day candlestick where that aligns with what I'm thinking. I'm just like, no, I don't know. All over the place with AGL. Other than that, chart doesn't look that bad. There is a bit of resistance right there, sort of in that level there. And share price struggling to get above, what is it, about 12.20. Yeah, and it started today, it pulled back today. And finally, Imdex. This one I didn't find anything overly interesting in this one either. So obviously I missed something with Imdex. I'm just going to have a quick look. I didn't write any notes for this one because I was just not that impressed. In fact, I didn't even write it down. That's how lack of impressive I was. I thought the numbers were nah. So this is another company that compared their results to the first half of 2024 and also the second half, because if you just looked at the first half results, down 10% revenue, but up 1% on the second half. So again, manipulating the story. That's what CBA did. That's what Index is doing here. They're manipulating the story because if you look or compare the results to previous corresponding period, it's weak. But if you compare it to the second half of last year, it looks a little bit better. So EBITDA up 28% and 31%. EBITDA normalized, which I do prefer, down 10% compared to previous corresponding period, but up 7% compared to the second half of 2024. Interim dividend 1.5 cents, net debt 15 million, on track for net cash in financial year 26. That does actually sound pretty good. There might have been an upgrade, maybe. Capital management policy and dividends. Let's see, no sign of an upgrade. Near-term market activity is expected to remain steady, tempered by ongoing inflationary pressures and geopolitical tensions. The outlook for financial year 26 and beyond is positive. Well, yeah, I think most companies are going to say that, to be honest. Anyway, so looks like the market has liked these results, and I was like, so possibly these results were better than expected. In fact, in TradingView, do they have anything on that? Imdex, where's Imdex here? Yes, yeah, it is better than expected, up a bit. I'm not sure if I absolutely trust TradingView's numbers, but so maybe this was an earnings beat. So let's have a look at the chart for Imdex, IMD, and I've got nothing to say negative. I've got nothing negative to say about this chart. Share price long-term high. In fact, you could say this is a breakout. It fits most of my criteria. Yeah, it fits all my criteria. Positive financial results. Share price up, so it's probably positive. Share price at least a 6-month high. Well, at least a 3-month high, but I do prefer a 6-month high. Last time share price was this high for Imdex. We're talking about 3 years ago, because early 2022 is 3 years ago, and higher volume than average. You can see a really big volume came in September, October 2023, and that is when the share price reached its bottom. So that's always a good sign. When you see some really big volume coming in, as the share price has fallen and keeps on falling, and then you see the big volume coming in, that's a sign the bottom is being reached. More than likely, value investors, fund managers see some value and you get really big volume, and that can sometimes indicate a bottom. And that is what we saw back in October of 2023. The share price was $1.40. Share price has doubled since then. Okay, so that's a little bit of a surprise for me. Imdex, didn't expect that one. A few REITs released their results, including Arena, Dexus, Industrial. I won't touch upon those. And that, I think that's all I'm going to talk about in today's video. I'll look at a couple of your comments. Sanka wants to know about call options. I won't answer that because I'm not an expert in call options. Happy Now says, can't wait for a standalone video on Bioxyne. Well, there won't be a standalone video because they did not release any news flow. So I will only do a standalone video on a company if they release something really interesting, or surely at least to mention. Well, at least I mentioned it for Happy Now. IperionX is worth a look. Okay, so technology-wise, no idea. This is a story stock. You know my thoughts on story stocks. It could go one or two. Well, it can go many ways. This could be, in 20 years' time, this could be the biggest company on the ASX if their technology is out of this world good, if everyone wants it. Or in another 5-10 years, this company is never heard of again. There's many different ways this company go, and that's what can happen to a story. I mean, you start reading a book, so first few pages, and a lot of times you have no idea where it's going. Sometimes you can tell, but if you can tell where a story is going, why would you continue reading it? It's why I don't watch romantic comedies, because they're all the same. Every single rom-com is exactly the same as the previous one. I can tell you exactly the storyline of every single rom-com because they have very predictable storylines. So I don't watch it. Why watch them if you know what's going to happen? And I do prefer movies where halfway through I go, I have no idea where they're going with this one. I love those movies. Anyway, so Hyperion started their story maybe. I don't know their technology that closely. I'm assuming they are a story stock. I'm just going to have a quick look at their quarterly report just to confirm they are a story. I would say I can't even tell you what they do, their technology, and they don't have any receipts. So if you really want to know what a company does, you go to their About section. Aims to be the leading American titanium, metal, and critical materials company using patented and proprietary metal technologies to produce high-performance titanium alloys from titanium minerals or scrap titanium at lower energy cost and carbon emissions. Sounds fantastic, but will they succeed? I have no idea. And adding to that, you have to pay a pretty penny for shares in this company. This company is valued, I would say, 1.41 billion. So a lot of success has already been priced into Hyperion. And we've seen this in the past with companies, story stocks, who are priced like this, and then the share price just collapses. That can happen. And sentiment is really important for story stocks. So let's have a look at the chart for Hyperion. And look at that chart. This is a beautiful chart. Oh, fairly big pullback. And it looks like the share price has found a bit of a floor, and it looks like possibly the 25-day moving average is a bit of a floor on the share price for right now. We don't want to see the share price drop below 22 cents or $22. That would be really negative. So up until recently, the share price, or the chart looked pretty good. You can see acceleration in the uptrend back in August, and maybe that has come to an end. But overall, chart looks pretty good. Share price moved into an uptrend in April 2023, and the share price has been a fallbacker since then. Even then, the market cap of this company was like 300, 400 million. Insanity. Other than that, I have no idea about the technology. And I've mentioned in the past, I am willing to hold 2 story stocks. Right now, I own 1 story stock. Actually, that's not true. Well, it depends how you define a story stock. I own 1 company that has no revenue. 1 company. And that's more of a hedge. Clarity Pharmaceuticals is more of a hedge in regards to Telix, but that's another story. And I do own Pointera. Some might say that's a story stock, but they are on the precipice of becoming profitable. And that is what I'm looking for. Stu Percy says, I have purchased a few items from Kogan, but lately I found Amazon cheaper and next day delivery. And I'm not a member of either company. Okay. I have bought 1 item from Kogan in my lifetime, and that would have been 5 or 6 years ago, maybe even longer than that. And I buy stuff from Amazon all the time. Most recent thing I bought was a hard drive. Bought it one day, it was here the next day. It's cheaper. Next day delivery. Amazon. I mentioned this to someone, a colleague, many years ago. Amazon one day will rule the world or own the world. But Amazon is one of those companies I want to own, and I now own it. Okay, I am going to stop the video there. So there's quite a few comments I didn't get to, unfortunately, for those. Anyway, so if you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.